So we've got a great class. Again, I'm Mike Reibel, along with Christine Gray and Hope Arias. We're the managers of Realty Advantage in Rockville. We've got two great guests today. I do want to let you know we had a last minute change on the second part of today's class. The two gentlemen that were going to handle the social media had a flight change. So as I understand it, they're actually on a plane right now. So we are going to reschedule them to their own class in March. So we'll keep you posted on that. So we do apologize for the last minute change, but again, we've got a lot of content on the front end, and we're really excited to have actually two folks I've known a long time. Lynn Fishman, I think we've known you for 25 years or so, and she is the insurance guru. So we're excited to have her on board. And again, Paul Pykosh, again, the sponsor, friend of mine, lender, 25 years, done all my mortgages. So again, these are folks that we actually do business with, and we appreciate their time today. And I think, as Chris had mentioned, we were coming up with class topics. One question we get all the time is about flood insurance. And again, it's something that's super important that, you know, admittedly, I don't know as much as I should. So I'm excited about today's class as well. And it's one of those things where, again, as you're growing your business, the more knowledge you can have about these topics, you can help protect your clients. You can avoid last minute closing delays. And it's crucial to know this type of stuff up front. So again, we appreciate everybody's time. I think Chris is handling the slide, right? So are you able to screen share, Chris?
Yep, I will do that now.
Okay.
I had a recent problem where we had to lower the price 50,000 because if you don't have a lender, you don't automatically pull the flood zone. We paid cash and we didn't see it.
Oh, wow, really?
And then the insurance was $2,000 a month or something to those people. Thank God they even bought it. So you got to be proactive of looking. It doesn't happen automatically, except the lender does.
Yep, exactly. And that's why I think this is a great topic, is it usually comes up, you know, 3/4 of the way through your transaction. And it's a mess. So again, the more you can educate yourselves as to how it works and how to help keep an eye out for your clients. Again, that's what we're hoping to do here. So I would ask anybody that's not either Lynn or Paul, please mute your microphone. We had an issue in the last class where we lost about 10 minutes of content. So we want to make sure we can record all this. You guys can refer back to it, and we want to make sure we respect the presenter's time. So, all right, I guess Lynn, you want to kick it off?
Sure. Good morning, everyone. As Mike mentioned, my name is Lynn Fishman. I have an independent insurance agency in Rockville for over 35 years. We work with realtors to help their clients obtain insurance for their home, investment properties, or vacation homes. When Chris asked me to speak to a group of realtors from our office about flood insurance, I thought, what could be more exciting than flood insurance?
I'll call you in 45 minutes.
In your world, there are a lot of things that can make a deal go sideways, and my goal is to make sure that a need for flood insurance isn't one of them. What I hope to do in the time we have this morning is tell you a little bit about flood insurance and the National Flood Insurance Program, and where, with the tools you already have available to you, you can find the flood zone for a property, and you will know if, based on the zone, if the property will require flood insurance if there is a mortgage involved. And as it was mentioned earlier, if there's no mortgage company involved, you may not know that the properties in a special hazard flood zone. So you have the tools that you can pull that information yourself. So first of all, what is a flood? So the National Flood Insurance Program defines a flood as a general and temporary condition of partial or complete inundation of 2 or more acres of normally dry land, or 2 or more properties, which one of them is the insured property, from an overflow of inland or tidal water, unusual and rapid accumulation or runoff of surface water from any source, or mud flow. And you can go to the next slide, Chris. Who has a flood risk? Well, actually, all property owners have a flood risk. Flooding is the most common natural disaster in the United States, affecting every state. On average, though, 40% of flood claims occur not in a high-risk flood zone. Flooding can happen anywhere. Flooding can happen anytime. Poor drainage systems, summer storms, melting snow, neighborhood construction, and water mains are all considered flooding events. And those are not things that are covered under a homeowner's policy, and it might not even put you in a high-risk flood zone. Those are things that occur on a regular basis. If you think about last summer when we had those floods where there was inundation of rain over a short period of time, those people weren't in flood zones. All the water that was rushing down their driveways into their basements was a flooding event. It wasn't a covered loss under homeowners insurance, because homeowners insurance doesn't cover any type of flooding event. In 2019, the National Flood Insurance Program paid an average claim of $49,000. The flooding events that we see on the news are really the catastrophes, but a lot of flooding events occur that are not catastrophes, but are not in high-risk flood zones. A one inch of water in your home can cause up to $25,000 worth of damage to your property.
Hey, Lynn, I just had a quick question. Sometimes, homeowners or buyers will ask, like, "Oh no, the flood insurance is covered in my homeowner's policy. I've got the backup policy or whatever." So I think there's a little bit of confusion there too. Can you maybe talk about that for a minute, about the difference between water backing up in your house, that rider or that addition to your insurance, as opposed to flood insurance?
Sure. So the homeowner's policies has a specific exclusion for flood, and the definition of flood was the sudden inundation of water. So your homeowner's policy has coverage available if your main sewer line backs up. So if the line from the street to your house flows the opposite way that it's supposed to flow and backs up into your home, that coverage is sewer and drain backup, and you can buy that as an option on a homeowner's policy. Or if you have a sump pump in your basement and the sump pump overflows because there's just too much water for the sump pump to handle and it's flooding your basement, that is coverage available through the sewer and drain backup. But if the water's coming out of the sump pump and it's also seeping through the walls or coming under your door in the basement because the drain is clogged because you left leaves there, that is not a sewer and drain backup. That's a flooding event, and that's specifically excluded in a homeowner's policy. Does that make sense?
It does. Thank you.
Mm-hmm.
So would flood insurance then be an additional rider or option to add on?
Flood insurance is only available. Well, I shouldn't say that. Most companies do not write flood insurance as an option on your homeowner's policy. There are some companies that will write flood insurance that, in addition to the program through the National Flood Insurance. But you normally, to get flood insurance with your everyday homeowners companies, you have to buy a separate policy through the National Flood Insurance Program. So I think that is the next slide. So how is the flood insurance determined? Well, actually, if you can go, no, that's fine. We'll just skip around. So when you're looking at flood insurance, the rates are based on flood zones. And here's where you as a realtor can determine whether or not the mortgage company is going to require flood insurance. So look, this is a picture of a flood zone map that I pulled up from the FEMA website, which the website is available. On one of the slides, I showed you the website. This is a portion of the flood zone map. And you can see on the map that there's different zones. So zones that are considered special flood hazard zones are mandatory purchase zones. So the A&E zone, which is most common, what you would find in this area, is the zone AE. And you can see that on the flood map. And also VE is a common flood zone. And in the gray area is the zone AE. This is a portion of a flood map that is actually shows the town of Chevy Chase. If you follow the gray all the way down further, that's not on this slide, you'll see that it goes through Kensington, Wheaton, Rockville, quite a ways down on this particular map. So there's areas in that part of Chevy Chase, Kensington, Wheaton that are actually in a flood zone. Now it's hard to tell from this part of the map where there are properties and where it's just Rock Creek, but a lot of those homes along that area would be in the AE zone and require flood insurance. And it might not be a home that you would consider needing flood insurance, but you don't want to find out too late that maybe that is a house that needs flood insurance. So the reason I pulled up this part of the flood map is because we have an insurer that has a home, and I was telling Chris this, there's a home off of Veers Mill Road that when the FEMA remapped the county, or the whole country actually, they decided, it was determined that her home on Veers Mill Road in Wheaton is now in a flood zone. So when she went to refinance her mortgage, she was now required to carry flood insurance, and her home probably has a market value of maybe $300,000. It's a townhouse, and her flood insurance premium is over $5,000 a year. So when she goes to sell her home, I assume that the new lender will require her to carry flood insurance, which she's in Wheaton, for heaven's sakes, off of Veers Mill Road. Now, who would ever think that that would be an area that would require flood insurance? So there's a lot of ways to make a real estate deal go sideways. So hopefully flood insurance isn't going to be one of the reasons that happens to you. So the next slide. So how does the National Flood Insurance Program work? Well, not everyone is eligible for flood insurance. Your community has to participate. FEMA agrees to make flood insurance available if your community agrees to enforce floodplain management. There's areas in College Park now that have had flooding. They're not in a flood zone, but they have had flooding most recently in all the rains. So they now are changing their floodplain management and helping those residents there to fix their homes or the areas so that they're not, every time it rains hard, their house doesn't flood. So how do you buy flood insurance? You either buy it directly through the National Flood Insurance Program, or you can buy it through a licensed property and casualty agent. Usually most agents will only write it if they insure the home as well as the flood insurance. The difference with flood insurance and a regular homeowner's policy is that there's no binders. You can't bind flood insurance. The application must be completed, approved, signed, and paid before the flood insurance can go into effect. There's no collecting its settlement or anything like that. It has to be prepaid prior to settlement. If the lender requires it, the coverage can go into effect right away. If not, and the buyer is purchasing the coverage, there's a 30-day waiting period before the coverage goes into effect. And so here is a map of a location that, well, Chris, do you want to go to the next slide, the one that you pulled up from your listing? So where do you find the flood zone? So this is available to you through a website that you have access to. On there, Well, Chris, maybe you want to talk about how you find it on the,
Sure, yeah, if you're looking at a listing in Bright, you can either, at the top, there's a little, looks like a courthouse, that's your icon to get to the public record. And then you can either click this tab for flood report, or you just scroll all the way down to the bottom of that public record, and you should see this flood zone information at that very bottom. And I was telling Lynn, this is one that I had run into where there was a creek, what I thought was way behind the property, so it probably wouldn't have even really raised the red flag, except that thank goodness I looked at this and I saw that it had these two flood zone designations. And so Lynn can explain this, but I was confused why it says zone X, which is, quote unquote, your safe area, your non-flood zone area. But then it said it was within 250 feet of multiple flood zones. So I just got nervous, partially because we knew there was a creek back there. And then I saw these multiple zones. So I knew to raise the question just to make sure my buyer would know going in whether flood insurance might be required.
Was it required on this one?
no, I will show you on that zone. So if you look at the top, it says that the parcel is in the X zone. And then further down, it says X or A and E. So if you go back to the map, so I went into the information that I have available to me when we pull a actual quote on a flood policy. So that property in Montgomery Village is that little white dot. So that white dot shows that it's in an X zone, but right behind it is where the blue is the zone A and E. So the flood map actually puts that Montgomery Village house in flood zone X. So it's in a preferred zone, so it would not be required. But any homes that were behind it or on the arm that goes out to the right, if there are any homes there, which you can't really tell from the map without putting in an address, but any of those homes along that area could be in an A and E zone. So you would never know unless you pulled up the actual flood map. And all those little squiggly lines in there show what the base flood elevation is, and that helps determine what the rates are. So the rates for a flood policy are based on the zone, how the elevation of the house, how far up it is above the base flood elevation, which is FEMA's terminology for how they decide what the rating is. The rebuild cost of the house, does the house have a basement or no basement, a crawl space? How tall the house is to the adjacent land. And the maximum amount of coverage that is available through the federal flood program is $250,000 coverage for the building and $100,000 on contents. And that's through the NFIP. There is excess flood available, but most lenders that are federally, if the loan is federally backed, they can only require up to $250,000. And Paul can correct me if I'm wrong. But some lenders can make their own rules and decide that the home needs to be insured for the full amount of the loan. I hear a lot of times that, well, why do I need to get flood insurance if I can just go for disaster relief, or disaster assistance? So the difference is that most forms of disaster assistance require a presidential declaration. And the most common form of disaster assistance is in the form of a loan. It's not free money. You have to pay it back. So flood insurance doesn't have to have a presidential declaration. It's not a loan. You don't have to repay it. And flood policies are continuous. They're not canceled if there's multiple claims. And the policyholder is in control. There's no requirement, as I mentioned, for a presidential declaration. So there's a big difference. And on average, 40% of, as I mentioned before, 40% of flood claims are on properties that are not in a designated special hazard zone. So think,
What is the difference between the NFIP versus getting insurance through an agent? Is it just the ease of getting it, or?
all flood insurance premiums are exactly the same. So the policies actually go through the National Flood Insurance Program. So if I write a flood insurance policy, we use Write Flood Insurance. There's a lot of companies that write their own flood insurance, but all they really are the servicing company. The actual paper is through the NFIP. So they're the ones underwriting the policy, but the NFIP uses the benefit of the established claims departments and service departments of the insurance company. So there's bankers, a lot of independent companies that you've heard of write flood insurance, but it actually goes through the NFIP.
Okay, but to use the NFIP, you have to be in a high risk zone?
No, anybody can get
okay.
flood insurance.
Okay.
Anyone can. So if Write Flood writes a flood policy, it could be in an AE zone, an X zone, a VE zone, any zone. It's just depends on the zone, but everyone's eligible for flood insurance if your community participates.
It has to be in a community that participates.
Participates, right?
What if you're in a community that doesn't participate?
Then you're out of luck. Yeah, there's not too many communities that don't participate. You know, there's some areas now on the barrier islands that the National Flood Insurance will not insure those properties anymore because multiple claims and, multi-million-dollar homes are being built there. But if most communities do participate, but if your community doesn't, you have no access to flood insurance.
So then you couldn't get a loan on that house.
Right.
And also, would you, since 40% are in good areas, would you recommend getting, and it would be probably cheaper, an additional flood insurance as well as homeowner insurance? Because 40% of the floods are in good areas.
Right. Well, you have to remember that when FEMA does the flood maps, they only look at oceans, rivers, lakes, and ponds. They don't map flooding from local excess rain or from pools or from levees and dams. They don't map those. So if you're near Brighton Dam, where a couple years ago when the dam was going to burst, or in Ellicott City in those areas, they probably weren't even a high hazard flood zone. But because those areas aren't mapped, because there's no local, oceans, rivers, or lakes. So even homes that are not in high hazard flood zones still should think about flood insurance. Absolutely. And if you're in a preferred flood zone, the premiums are very reasonable in considering what can happen.
What's reasonable, like $1,000 a year?
No, for 250, well, the mapping just changed, so the rates are changing. And 6 months ago, if you asked me that question, I knew exactly what the answer was. But somewhere for 250,000, the premiums were $475
for a year.
Right.
Okay.
Right. Now, flood insurance, if you have a basement below ground, it doesn't cover your contents. It only covers the structure. But yeah, compared to what could happen, flood insurance premiums are pretty reasonable. So I don't know if anyone's put any questions in the chat box. If anyone has any questions.
Don't see any yet, but yeah, don't be shy, guys. If you have any questions, type them in. I can, I'll watch that and read them out.
Yep. There was one just clarifying what it meant for the community to participate, but I think you covered that by now. And you had provided this link to FEMA as another way to look up the flood zones, correct?
Yes, that's the link. If you click through there, it will show you it'll show you the address, and then you can click on the map and it'll show you the map, and that's where that map from a few slides ago shows that particular area.
I would say as an agent at a minimum, if you know you're anywhere near, whether it be a lake, dam, pond, creek, certainly check, if your clients are getting to the offer stage, dig into the public records, check that flood report tab. Let's, check out the FEMA site, start doing some basic research. You kind of know ahead of time, and certainly before taking a listing, that would be the first step, I would assume, as far as doing your due diligence.
Yep. And the last point there too is, if, like Mike said, if you see any red flags, float it by your loan officer even before you do an offer so they can check it out. And that does kind of segue us to Paul, who's the loan officer who's on the call here with us, so he can talk a little bit about what the process is on their end and some things they do to help watch out for you for flood insurance as well.
Yes, thank you, Mike and Chris and Lynn. That was a fantastic presentation. My involvement as a lender usually comes into play a little later in the process once a contract's written. However, it's like Lynn was saying, it's a great idea, especially if somebody has a cash offer or if you think that the property could be near or in the flood zone, to dig into this earlier on, so that when I pre-qualify somebody or pre-approve them, we use appropriate numbers, or maybe at least add the possibility of that to make sure there's not going to be an issue in the loan. When we get a contract, the first thing we do when we do our disclosures within 3 days is order a flood cert on all of our transactions. So we will never have a surprise down the road, like, oh, by the way, there's flood insurance a week before closing. That won't happen because we will have ordered that flood certification within 3 days of getting that contract. So that's peace of mind for everybody to know that at least we'll know earlier in the process. But again, like Lynn was saying, if you think the property is at risk, let's have that conversation earlier rather than later. But as a catch-all, we do order that flood cert at that point in time in the process once we have the contract. That's the very important piece, because the worst thing to do is to have that find that out later. And obviously it comes into play with qualifications. If an insurance policy premium like flood is a significant piece for the monthly payments, because it's going to be escrowed, we're going to have to account for those costs in that payment. So that is definitely an important part of our qualification process, especially for a borrower that's right at the top of what they're going to try to qualify for. But that's really it in a nutshell for my piece of this. Once the flood insurance is taken care of and we get a policy, it's just like any other loan. We just factor that payment into our escrows, and obviously that flood insurance piece has to be paid before closing, but we're at closing. But we want to make sure that we calculate the right numbers for their monthly payments. But that's my piece in a nutshell. Mine's a little short and sweet compared to Lynn's, was much more detailed.
I think it's important to note too, if you have a buyer who's all cash, still make sure you're looking out for the flood zone, look out for any of those red flags, like Mike mentioned, because it doesn't mean they're not going to qualify for the loan. But guess what? If they have, like Lynn said, that one client who happened to be in a zone where her insurance was $5,000 a year, your cash buyer might not be budgeting that expense. So they need to know that going in. And of course, just have the general conversation about the risks of whether they have flood insurance or not. At least you've had that conversation.
You're dealing with flippers, which I did in Brentwood. I had sold 15 houses, no problem. The line just happened to curve in the Anacostia watershed. And when we went to flip it, it was a disaster. It wasn't 5,000. It was like 4,000 a month. It was in the 100-year flood zone. But none of the other ones were. It wasn't near anything. Didn't know to look.
Yeah.
So Lynn, I just had a question. You mentioned something earlier about when it goes into effect, it's different than a homeowner's. And you said something, there's some kind of distinction that if a lender requires it, it goes effective immediately. And then Paul, you had mentioned they have to pay it up front. So can you walk it through if, so I'm a buyer, I'm doing a loan with you, Paul. I do the application, then it turns out after you do your flood cert, flood insurance is required. I've got 21 more days to closing. When does that typically happen as far as that buyer having to pay for the policy, and so that it's effective at closing, correct?
Yeah, we want, no buyer is going to want their policy to be in effect prior to closing, but
Right.
We as a lender, we're going to want it to be a mandate that the policy, the effective date is the day of closing, to make sure there's coverage the minute they, are owners of that home. But I'm not saying that necessarily they have to pay it 30 days in advance, but it has to be accounted for at closing. It's not something that, they're not going to pay a deposit and then we escrow it. That whatever the policy premium amount is going to have to be accounted for before or at closing.
Sure.
And Lynn was saying it's going to be an effective right away if it's a lender involved.
Well, what's the 30-day wait then? I don't understand.
The 30-day wait is if it's not required by the lender. If you are a homeowner that just decides they want to have flood insurance, then there's a 30-day wait before it can become effective. So if you're on this settlement on April 1st and you can apply for the coverage on March 1st and it'll become effective April 1st, but you can't decide on March 30th that you want coverage effective April 1st when you buy the house, unless it's required. If it's in a special hazard zone and the mortgage company requires you to carry it, then it can become effective the day of settlement.
Yeah,
So in other words,
Do you have to pay a month in advance then in the case that you don't have a lender?
you have to pay, it has to be paid in full.
A month in advance.
No, a year, the whole year.
You pay the
No
yearly
payment plan.
policy,
But
it
you do
doesn't
that
go
a
into
month
effect.
in advance from settlement.
Oh, yeah. Yes. So if Hurricane Maria is heading up the coast and you're a homeowner and say, oh, I want to have flood insurance effective on tomorrow because the hurricane's going to hit, that's not happening. That's why there's a 30-day wait.
Unless the lender requires it.
Right. If you're settling, right. If you're settling and you've already have it all lined up, then yes, it can go into effect. But if you decide the day before settlement and there's a hurricane coming and you want to get a policy and you haven't already arranged that, you're not finding any company that's going to write a policy the day before a hurricane's going to hit. So most of them shut down, close binding if there's a hurricane on its way or any type of storm. We get alerts all the time. No coverage can be bound effective whenever there's a hurricane watch. So that's another reason why it's important to prepare, because you never know what can happen. So, and one thing I want to add about the 100-year floodplain, what the 100-year floodplain means is that there is a 1% chance, annual chance, that a property will flood in any year. And each year, the likelihood grows. So if you, over a 30-year mortgage, the likelihood of a flood in a 100-year floodplain grows from 1% the first year up to 30% in the 30th year. So it's kind of an interesting, a 100-year floodplain doesn't mean that there's only going to be one flood in 100 years. It means that there's a 1% chance that there might be a flood on your property.
Does that increase over time? Like if I own the property, it does. So if I owned the property for 30 years, every year my flood insurance goes up based on that likelihood?
No.
Oh, okay.
Well, no, it doesn't go up because of that. It just goes up because there's so many more claims than there used to be. So the premiums have risen since I can remember. They've gone up quite a bit. They used to be in the $300 range and now they're in the upper fours. Yeah, so they have gone up a lot.
They're not in the upper fours for a 100-year plain, right? That's higher.
No, if you're in a special hazard zone, then the rates are higher.
Yeah.
But not everyone's in 100, well, most people, some are in a 500-year floodplain, but most properties are in a 100-year floodplain.
That's the zone X, right?
Zone, right.
Okay.
Zone X are in the get preferred flood insurance, and the rates are much lower than if you're in a special hazard zone.
When you're a 100-year floodplain is considered a special hazard, correct?
Not
But
every,
within the 100-year floodplains, there's still other designations. Okay.
right.
So if you're looking at a listing, correct me if I'm wrong, Lynn, but you're hoping to see zone X. You know, you can still counsel your client, like they can look into getting flood insurance, but they're in a low risk zone. So if you see zones like AE is like a creek zone around it, like Rock Creek, or, you know, we have a lot of tributaries like in Frederick, there's a lot of properties that might have AE because there's so many, you know, little streams off the Monocacy. That's, I think, most likely in our area. If you see that, that's your red flag. I
Right.
think some of those other zones you were saying are more like coastal, you know, if you're out by the beach, would be different ones. But yeah, I think if you see anything other than X, that's when you're either calling a lender, calling the insurance agent, or at the minimum, you know, alerting your client and preparing.
Yes, that is totally correct.
So
Any other questions?
do we have any other chat questions, Chris? I can't see those since you're the host
No,
right now.
I don't see any.
Okay.
Mike?
Couple things I wanted to mention is I know at the beginning we had said that as far as the social media, we're going to be rescheduling those to next month because of their the flight delay. But Paul is going to mention a little bit about the program. It's his mortgage company is actually paying these guys, and it's something we had mentioned in our last class as far as, you know, benefits they're offering to agents that's pretty unique. I've never seen before from a mortgage company's perspective. Before we segue to that, I just, again, want to mention that to Lynn, you can do all types of insurance, correct?
Yes,
Okay.
that is true.
So, you know, please reach out to Lynn if you have any questions. Again, we've been using her forever. She's amazing and very helpful. You know, anytime we have a question about a policy or about an issue, she's always available, very responsive. If you need to reach her, her email address is on the slide, and we'll be including that. As usual, we're going to post this video to our website. So a lot of our agents refer back to that after these classes. So her direct number is there as well. Also, Paul's information, email address and direct number there. It's his cell is available as well. So again, we had about almost 20 agents today, so we appreciate. But we're gonna unless you guys have any other questions for insurance before we segue over. Again, just be a couple minutes. We'll chat about the social media stuff.
Yeah, again, thank you, Mike. If anyone has any questions that you didn't think about during the session, feel free to give me a call. I can direct you through the flood mapping if you want to look it up. I'm happy to assist. It's not, once you do it once, it's not complicated. You'll figure it out. You can look at the maps, enter your address. You can put in there's another one that's a little bit easier. It doesn't give you your flood zone, but it shows you where you are in a map. It's called Flood Smart. I think it's floodsmart.gov. And that's very easy. I'm pretty sure that's it.
Mike, I vote that we invite Lynn to the party. Paul didn't do too much yet, but let's see what he has left.
Thanks. Is that the website? Floodsmart? I think. Oh, it's not that. All right, I'll get that website and send it over to Chris, because it's very easy. You can put in your own address and figure out what the chance of having a flood on your property is.
That would be very helpful. Yeah, I mean, because
Could
again,
we call you if I have a cash guy and just say, hey, listen, I mean, we should do it ourselves, but could you do it?
Yeah, you can give me a call,
Okay.
but then the customer has to do their insurance with me if I do it. No, I'm just kidding. I'm just kidding.
Absolutely.
No, that's,
You scratch,
Just kidding.
no back scratching.
And Lynn also does, in addition to obviously just the flood, homeowners, car, you name it, life insurance. We've got several policies. So she's very helpful. She's got access to a few programs. She doesn't, she'll point you there, but definitely reach out with any insurance needs at all.
Do you go through like major companies then? You broker it to Nationwide or something?
Our main company is Erie. We're primarily Erie agents, but we do have Farmers and Foremost. We have companies for properties that don't fit into the preferred companies, flippers that the house isn't in great shape. So we have companies for that. So, but primarily we write most of our business through Erie Insurance.
Do you do, while flippers are working, there's flipper insurance. I use Chenault, but I could go to you. Do you do that?
We do. We write it through, if they need a builder's risk, we have Zurich. If they don't necessarily need a builder's risk, then we can write it through Foremost, which is Farmers.
While they're working on the property to flip.
Right. Right. As long as they're insured contractors, yes.
What if they're just, some of my flippers are not contractors. They're just flippers. They're just.
Do they hire a contractor to do the work?
On the things that are required.
Yeah. Well, we can discuss it, but most of the carriers want the flippers to use a contractor that's licensed and insured. So if there's any problem, it'll go back to the contractor.
Chenault, I just call them, give them the address, and they're insured. That 5 minutes.
Well, that's good. Don't know what they're insured for. That's always an issue.
Mm-hmm.
Yeah. Yeah. Okay, I haven't found that address. Okay, so I'll get that website to you with the.
Great. Yeah, we'll include links to everybody once we've wrapped up the video. Looks like we're at 12:45. So again, a lot of content. I do want to hand it off to Paul. One thing that, as I mentioned in the last meeting, that AnnieMac's doing that I think is unique is, and Paul will speak to this, is they really are kind of reverse engineering it thing, as far as building out ways to help agents grow their business as a way to get the loan business, as a sign of good faith. So the gentleman, Gene and Brian, that we'll be connecting with in the coming weeks, he can kind of chat about his experiences with them. I've met these guys. We had dinner at Clyde's. Paul had their whole marketing team, and it was pretty impressive. This is probably 2 months back. So I'm excited to get these guys to chat with you about what they do. So with that said, Paul, let me hand it off to you about the social media aspect of it, and you can kind of explain that a little bit better.
Yes, thanks, Mike. Again, apologies for Gene and Brian not being able to be here today. Their flight got rearranged, and they can't really do one of these Zoom calls from the air. I guess maybe they could, but it really probably connection would be horrible. But I figured I would take a few minutes just to introduce our platform, our philosophy, so that when they do come around next month to do their class, you'll have a little bit more knowledge about what they do and how AnnieMac is a little bit different than most of the lenders out there. I've been doing mortgages for over 26 years, and this is one of the first companies that I've been with that does things differently. And what I mean by that is, rather than come out and ask you for a transaction, hey, can I have your next deal? We don't really do that. We come out and we want to start with value. We want to present things that are going to be of value and of service to you to help you grow your business, so we can work on a partnership, and then you'll want to work with us. If you do, great. If you don't, I understand everybody has their favorite lenders, but that philosophy is different. And one of the things that you'll see with Gene and Brian next month is they will help you with your social media and video marketing stuff. They do that for a living, but they are part of our team. and they'll give you a lot of tips. And in fact, what I'd like to do for you now, they would have done this also, is invite you, and I'll send the link to Mike and Chris. They'll invite you to have a one-on-one session with them, a Zoom call, if you will, and they'll do a realtor assessment of your current video marketing, social media presence, etc. And they'll do a deep dive with you and assess what you have going on, what's good, and give you some professional ideas of how to improve and what may work for you individually. And then maybe next week or next month when they come around, you will have a step ahead of the game when they introduce more things to you. No charge for this, it's free. So if you're interested, I'll send those links out to Mike and Chris, and we can get that to you. In addition to the social media and video marketing that we were going to talk about, and they'll do a deep dive with you, we have other things too. The last couple of weeks, we had Randy speak with you about our perks program. That's all part of our platform as well. And we have what is called AnyWorks. AnyWorks is a full training, education, support, coaching platform for you as a realtor, free of charge, that you can take advantage of too, to get certain designations. If you want to be a staging designation, renovation designations. As corny as it sounds, there's something called a pet-friendly realtor, that certification. And that sounds goofy, but there are a lot of people that will buy a house based on their pet before they will based on their children sometimes. People take their pets very seriously, and there are also a lot of laws that are involved in that. Some HOAs have restrictions on certain things that you may be able to circumvent with certain knowledge of laws, and that certification will go into some of those things with you. And then plus it's good marketing. I mean, social media wise, if I'm scrolling through listings and I see someone do a video of the inside of a home and they say, hey, this is the primary bedroom and this is the bathroom, whatever, that's all great. But if someone showed a video of a dog running in a beautiful yard, I would probably click on that more than I would some of the other things. So anyway, those are just little tips and things that they'll talk about with you with some of the video marketing material stuff that they have to offer you. But again, I just wanted to make that part short and sweet. If you're interested in any of those things, I will send links to that to Mike and Chris. If you want to have a one-on-one with Gene and Mike about your social media and video marketing, that'll be free to you. If you're interested in the Works platform, we'll send that out to you as well. And then if you want to speak with me individually about any of these things and have a deeper dive, my contact information will be there too. So I appreciate the time to introduce these things to you, and I hope everyone's having a good week and a good day. I know we're cut on time here, so I will keep that short and sweet. Appreciate your time.